Hi, I'm Martin McGrath. I'm a tax agent, financial advisor, helping people set up their investments for retirement. And one of the things I often hear people say is, oh, those investment properties, they're for my retirement. I was having a chat with a client the other day, and they had 2 or 3 rental properties, and they said, yep, that money's for my retirement. Is that going to be enough? So I said, okay, well, let's have a look at the maths and figure out how many rental properties do we need to retire? Or how much money in real estate do we need to retire? And so we went through a series of things, and a couple of things we know, and they are: 1, the retirement standards for a comfortable retirement for a couple is about $60,000 a year of income in terms of retirement. That potentially fluctuates every year, but that's roughly what we need, 60 grand a year to retire on. What we also know is that the average gross yield from a rental property is about 3.5%. So that means if we've got a rental property, the rent we get before we pay the agents, the council fees, the strata, the rest of it is about 3.5%. When we look at it, take away those costs, the net yield after that is probably about 2 to 2.5%. I'm going to use 2.5% in my demonstration. Importantly, it's important to understand, as part of this is also every now and then you'll have a one-off cost. You might have to pay 5 or 10 or 20 grand to do some improvements on the house, fix it up before a tenant goes in, or there's a period without a tenant. But let's use 2.5% as our net rental yield. So, if we have, say, $1 million in real estate assets, whether that's $1 million house or 2 $500,000 houses, we're going to get 3.5% gross yield. So about $35,000 a year. As I said, we have to pay agents, council rates, all the costs involved with holding that property. We're going to say that's about 1%. In some cases it's higher, in some cases it's lower. That's about 25 grand a year. So if I've got $1 million in property, what's that giving me a year? Probably about 25 grand. That's not enough to live on. So if we double it, let's say we've got $2 million a year, I'm now getting 50 grand. But that's probably only giving me $950, maybe $1,000 a week. If it's not structured correctly, I'm also paying tax on that. I think practically you probably need close to $3 million in property, giving you about 75 grand a year after cost. Because if you've got $3 million in property, you've probably got at least 3, 4, 5 different properties, and there's going to be costs that are involved with some of those. Every couple of years there's going to be some maintenance costs. So even though the standard's 60, I'm allowing potentially 5 or 10 grand a year to go in improvements on these properties, which is going to bring that 75 down to 60. I don't think you can retire on property with less than $3 million in property assets. Now, for some people that's achievable, but for a lot of people it's not. To be in a position where you've got your own house, that's paid off, and you've got $3 million in real estate, you've done really well. If that's the case, perfect. For a lot of people, mum and dad's working for 20, 30 years and not going to get to the point where we're in that position. So I think it's important to understand that and know that. We do a lot of work with clients around where they're at and where they're going, and are they going to end up. And often I find a lot of people are working hard. By the time they raise their kids, they've picked up a rental property in their 30s, they've picked up another one in their 40s, maybe in their 50s they've bought a third one, but they've all got debt. Are they going to be able to pay that debt off in time? Plus, is it going to be enough to generate what they need? And often perhaps it's not. So it's important to understand that and work towards that. If you're not on track to have 5 rental properties worth say $600,000 each to get you to $3 million and have that debt free by the time of retirement, I don't think it's be enough. So it's important to understand a few different things. 1, understand where you're going. Are you on track to get there or not? And if you're not, let's consider what other strategies we can do. So do we use that property to pay off debts and we get to 1 or 2 properties? And we use some other assets and have some money in super or shares or cash to fund our retirement? Do we use our properties, and what's our exit strategy? How are we going to get out? How are we going to minimise the tax before we retire? Once we retire, what does that look like? I'm also a big believer in when we have retired, and even if we are in this position, we've got $3 million in property, but if that's our only asset, I'm concerned about what's called liquidity, which is, if that's generating us 75 grand a year, that's great. That's good income coming in every week. We've got a rental property coming in. But if something happens that we need 10 or 20 grand to do some renovations at home, or take that big trip to Europe, or help our children or grandchildren get married, and we need to access 50 grand, we're going to struggle to get that 50 grand from somewhere, because We can't just sell off one bathroom of the rental property. The rental property is a whole or it's none. And so often I find is that people might retire with 2, 3 or 4 rental properties in retirement, but they end up very quickly having to sell one and then sell another because liquidity is an issue. So in terms of our planning for clients, we also try and make sure that when they're ready for retirement, whatever that looks like, whether it's 55, 60, 65, 70, that they have no more than 50% of their total assets in property. We want to have some in some other assets, some in shares, some in cash, some in term deposits, so they're not too illiquid. It therefore gives them time to wait for the markets to be in the right position to sell those investment properties if that's what they have to do. Importantly, the structure of these assets, as I would have talked about in plenty of other videos, we want as much of our money inside of super as possible. That's the best tax rate to minimise the tax we're going to pay on that. So, in answer to my original question, how much money do I need in property to retire? I think you're going to struggle unless you've got more than $3 million in property, and whether that's practically probably 3, 4, 5 rental properties, that's what we need to get to. It's a lot of hard work, it can be done, but we need to understand if we're going to get there. If not, the earlier we start with other strategies, we're going to help to make sure you're in the right space. Hopefully that's been helpful. Check out some other videos. Let us know if you're on track for your 5 rental properties or not.